Okay, so we are going to do budgeting today. Okay, budgets and budgetary control. So budget means budget is is an estimate of income and expenditure. Okay, it is prepared based on previous data. Okay, and then we are preparing budgets to control our cost or to minimize our cost, and we will get an idea of future income. We will estimate an income figure. Okay, we will prepare budgets for so many reasons. Okay, now look at my screen. Budgets, it is a formal statement of the financial resources set aside for carrying out specific activities for a future period of time. Okay, so budget means it's a formal statement of financial resources. Do you know what is meant by financial resources?
Yeah, it's like the inventory and stuff, right?
Yeah, raw material. Plus, give some more example.
Mm, yeah, raw material, produced goods and the services.
No, resources does not involve services. Okay, financial resources means capital, land, labor, raw materials, all that.
Oh,
Okay.
okay.
Okay,
Okay.
so for example, labor. So to pay labor, we are paying them wages, right? We are paying the labor wages or salaries. So wages and salary involves finance, right? Finance is involved in that, right?
Yeah.
So that's why it's a financial resources. Okay. So for example, another example, raw material. So to buy raw material, we have to pay money, right? We have to pay cash. So when we have to pay cash, finance is involved, right?
Yeah, finance involved.
Okay, so that is like, these are the examples of financial resources. Okay, so, budget is a formal statement of financial resources set aside for carrying out specific activities. Specific activities means like, well, let's say when there's a sudden demand, okay, so sudden demand for all that, okay. So to carry out sudden demand or to carry out unexpected level of, level of production like that for a future period of time. So in future, if you want to meet a specific demand or unexpected demand, all that, budgets will be really helpful. We are preparing budgets. It has so many advantages. You will know them. I will teach you later. So now you got a slight idea of what is budget, right?
Yeah, I do.
Okay. Now look at budgetary control. Okay, it is a control technique where the actual results are compared with the budgets. So, budgetary control means it's like a control technique where we compare actual results and the budgeted results. We will compare with the budgeted figure. And any difference will be the variance. Okay, it will be identified, and corrective actions will be taken. So when the variance is adverse, when the budgets are bad, or whether when the budgets have improved, or if the budgets have performed poorly, if it's wrong, then corrective actions will be taken. The management will take some actions. Okay, so that's all there. And then look at role of budgetary control. First one is, okay, so there are lots of role of budgeting. Okay, role in budgeting. First one is control. So under control you have budget is a formal authorization to a budget center, manage manage to a specified amount to be allocated to specific activity, thereby ensuring that resources such as cash and labor hours are controlled. So now budgets, when you're preparing budgets, you are just keeping a control of and minimizing that cost increase. Okay, so now budget means it's a prediction, right? So you are predicting the cost, so which means that you are minimizing the cost increase. You are just keeping a control and you are minimizing that cost. So the role of budgetary control is that uh, there is control. Okay, so cash and labor hours are also controlled. Like that, there are so many things. Okay, so let's see how we can control labor hours. Okay, so labor hours, you can control labor hours by minimizing the wages. Okay, you can reduce, like by minimizing the wages, you can reduce the labor cost. Okay, so there are many ways. Okay, so we will control. The role of budget is that it will help us to control our cost. Did you understand that?
Yeah, I understand that.
Okay, now planning. Okay, budgets will help a company to plan the resources and all that. Okay, so planning by using a budget, the use of resources such as cash, material, and labor is planned in order to achieve the objectives of the business. So all are planned. Okay, in order to achieve the main goal of the business. Okay, and then communication and coordination. Budgets communicate plans to managers and they are responsible to carry out them. Okay. They also ensure coordination between managers and subordinates. So each are aware of the other requirements. Okay. One more thing I forgot to explain in planning. So, okay, for example, let's say look at planning. Okay, for example, let's say if there's a recession in the next year, you will plan this year itself and keep. You will be prepared. So budget will be helpful in those cases. Did you understand that?
Yeah, I understand that.
Okay, now under communication and coordination, what they're saying is budgets will help managers communicate well and they are responsible to carry out them. It will ensure coordination between managers and all of them. Okay, and also they will implement new strategies. Okay, so if we are communicating with the sales department, then now itself we have to advertise more, and then if we advertise more we can increase sales next year. So, budgets will actually help a company to improve in the future. Did you understand that?
Yeah, I understand that.
Okay, now look at motivation. Okay, motivation. Okay, budgets are often intended to motivate managers to perform in line with organization's objectives. This applies specifically if the managers have been included in the drawing up of the budget. Um, which will then be realistic and achievable. The performance of the managers is often evaluated through revenue. Any variance between budget and actual results will then be assessed and corrective actions will be taken. So, what they are saying is budgets will help a company help a business because budgets will make the employees or managers to get motivated. Okay, so when looking at the budgeted figures and actual figures we will know whether the company has performed well or whether it has not performed well. So if the company has performed well, it will motivate them you know to make to improve the business, and if they have not performed well, they will do some corrective, they will take some corrective action to make the business successful. Okay, that is what they're saying. Okay, it will motivate the employees and all that people. Okay, also sometimes CSR will take place. Okay, corporate social responsibility, so that will also motivate them. And people at the higher post, like managers and all of them, people at the higher post only will prepare budgets. Okay, and they will give their opinion based on the budget set. Okay, so budget acts as a motivational tool for them. Okay, did you understand all that?
Yeah, I understand all that.
Okay, now look at aids to decision making. If all the managers waste their decision making around their budget, then all their departments' decision making will relate to their uh, cooperative plans and business objectives. Okay, so budgeting will also help a company to make good decisions. Okay, so okay, so they are saying if all the managers waste their decision making around their budget, then all other departments' decision making will relate to their cooperative plans and business objectives. Okay, so managers, it will help managers to make good decisions when they are looking at the budgeted figures, when they are looking at the past data and all that. Okay, did you understand all that now?
Yeah, I understand all that now.
Okay, now look at the advantages. Advantages and disadvantages are important for you to write theory answers. Okay, so we'll look at the advantages of budgets and budgetary control. First one is it compels the management to think about the long-term goals and plans. It gives a sense of direction. So, it encourages budgets will encourage the management to think about the long-term goals and plans. Okay, and it gives a sense of direction. Okay, so so they can focus where the business will be in the next 5 years. Okay, so budgets will help a business in all that. And then it establishes a basis for internal audit by regularly evaluating the department. Okay, so um, by looking at the budget they can make internal audits. Okay, within the company they can audit and all that. That is internal audit. Within the company itself they will do auditing. External auditing means outside the company a third party will do auditing for them. That is external audit. But internal audit means within the company, like people at the higher post will do auditing. And they will be able to evaluate and they will be able to judge whether they have performed well or not. So these are the advantages. And then look at the third point. It is a tool for controlling the cost and minimizing the profits. So budget is a very good thing to, like, if we prepare a budget, we will be able to control cost and we will be able to maximize the profits and all that. Moreover, it is a motivational tool and acts as a means of communication, because even in the role of budgetary control, we studied about motivation. So, budgets will actually help a company, help a business employees to get motivated. Okay, and then it helps the management to maximize the use of the available resources in a most profitable manner. Okay, so they can maximize the use of the available resources. Okay, because like sometimes a company will try to use the full resources, like sometimes the company will try to use the full raw materials. Okay, so budgets will help a company to maximize the use of the available resources, so they will not waste anything, right? Okay, so this will help
Yeah.
management in that. Okay, and the last point, it enables the management to take proper actions in regards to adverse variance. So let's say when the variance is adverse, then budget will help the management to take proper actions. Okay, now let's look at disadvantages. Disadvantages of budgets and budgetary control. First one, all budgets are based on historical data. Okay, so all budgets are based on past data. So what happens is if there is any mistakes or window dressing in the accounting data, then it would lead to then it would lead to incorrect budgets and budgetary control. So what they are saying is that they are saying, do you know what is meant by window dressing? Do you know or you don't know?
Window dressing, is it?
Yes.
Uh, no, not really.
Okay, window dressing means it's like this, showing the business in a favorable way. Okay, let's say, for example, now a person is a person, okay, a government is telling we have to pay tax. So what happens is they will underestimate their sales value, and they will show a less value for profits. They will make the profits low. So what happens if the profit is low? We have to pay less tax, right?
Yeah,
So that is showing the business in a favorable way. Did you understand that?
yeah, I
So
understand that.
window dressing means that. Okay, window dressing means showing the business in a favorable way. You can write that down. Okay.
Okay.
So, disadvantages of budgets is that all budgets are based on historical data. If there is any mistakes or window dressing in the accounting data, then it would lead to incorrect budgets. That's correct, right? If we show the business in a
Yeah,
favorable way, or if we do any mistakes, then it would lead to an incorrect figure, right? Incorrect budgets, right?
yeah, it lead to incorrect budget.
Okay, now look at the second point. Departmental conflicts can occur due to disputes over resource allocation or departments blaming each other. So that means now there may be some departmental conflicts with them, fights between them. Conflicts can occur. Okay, over resource allocation or departments, like some departments may blame each other. Okay, so for example, let's say the first department has only two labors. Okay, second department has only six labors. So what happens? First department, their work will not be done on time, right? Because they have only two labors. Okay, so the work is incomplete, work incomplete. But second department has six labors. So what happens? They will soon do their work, they will be efficient and they will finish their work on time. So what happens? There will be conflicts with each department. The first department, second department will say the first department, your work is slow. You have to improve, like that, like that. But then the first department will say, I have only two labors. So how can I work soon? Like that, they will say. So some sort of, there will be some sort of conflicts between them. So that is what they're saying in the second point. Departmental conflicts can occur. So if not, sometimes the departments will blame each other over disputes and all that. Did you understand that?
Yeah, I understand that.
Okay, now look at the third point. Managers may overestimate the costs so that they will not be blamed in the future. This will lead to inaccurate budgets and budgetary control. So, sometimes managers may overestimate the cost. Okay, so if they overestimate the cost, what happens is sometimes it may lead to inaccurate budgets, because we should not overestimate anything or underestimate anything. We should, like, you know, give realistic targets, realistic figures. So, we can't overestimate cost, we can't underestimate income. We have to, set a realistic target. Okay, so budgets means estimate, right? But that estimate also must be realistic. Did you understand that?
Yeah, I understand that.
Overestimate means, let's say last year's actual cost is 15,000. So, but then we are putting 20,000. So it's unfair, right?
Yeah, it's unfair.
Okay. Now, okay, sometimes, okay, another thing, sometimes managers may underestimate revenue. Now, let's say, so if they underestimate revenue, budget figure is false, right? So, but then when actual figure increases, okay, so it's like this. Now, when managers underestimate revenue, it means that they are showing a low value for sales. So what happens is the budgeted figure will be false. Okay. But then if when actual figure increases, then directors will know and give promotion to managers. Okay, because they have shown a low value for sales. But then actually in a company, when the sales are high, then the directors will think that this department has performed well and they will give a promotion to the managers. Can you understand what I'm saying? Or you want me to explain again?
Yeah, I want you to explain it again.
Okay, wait. Now sales. Revenue, they have underestimated the revenue. Okay, so let's say they have put only 10,000. Okay, but then, okay, purposefully, the managers have underestimated the revenue and they have put 10,000. Okay, but now in a company, in 1 year's time, let's say the revenue is 20,000. Because they have underestimated the revenue, the directors will think, so directors doesn't know they have underestimated the revenue. So directors will think, this year the revenue is 20,000, which means that the budgeted figure is only 10,000, but this year it has gone to 20,000. So which means the directors will think it has improved, the revenue has improved. But then actually it's wrong, they have underestimated the revenue. So, but then directors doesn't know that, so they will think that the actual figure is high, which is 20,000, and they will think that the business is performing well, and they will give promotions to the managers. So if they give promotion to the managers like that, when they underestimate and all that, and then if they give promotions like that, it's not ethical, right?
Yeah, it's not ethical.
Did you understand this now?
Yeah.
Okay, so there are cases like this in a business. It can happen. So even they can underestimate the cost. Okay, so no, so not underestimate. They can overestimate the cost, and they can underestimate the revenue. So it's like that. So in a company, we have to be ethical. We should not write incorrect figures. We should not underestimate revenue. We should not overestimate cost. We have to be ethical. Okay, that is what I'm saying. Did you understand this now?
Yeah, I understand this
Okay,
now.
all this will be good for you when you write theory answers. Okay, so you have to remember these points if you write theory answers. Okay, now look at types of budget. Types of budget. We have 8 types of budget. First one is sales budget, production budget, purchase budget, trade receivables budget, trade payable budget, and then cash budget, capital budget, and inventory budget. Okay,
Okay.
so let's study one by one. Now look at sales budget. Okay, we'll study sales budget now. We can say sales budget or revenue budget. Okay, so this shows the predicted rate of sales and the revenue that is expected to be generated from sales. So goods sold for this much, sale of vehicle for this much, sale of 5 motor vehicle like that. So sales, whatever we sold, the money we get from sales, the money we generate from sales is known as revenue. Sales and revenue is two different words. Do you know that, right? You know that or you don't know?
Uh, Kinda knew it, but then it's not like 100%.
Okay. Okay, so sales means whatever we sold. Sale of book, sale of motor vehicle, sale of furniture like that. Revenue, say that is meant by, okay, revenue. Let's say, okay, sales means that. Revenue means the money we got from sales. Did you understand now?
Yes, I
That's
understand
why
that.
the money we get from sales is known as sales revenue together. Sales means just whatever we sold. Revenue means the money we got from that sales. That is sales revenue. Did you understand now?
Yeah, I understand that.
So in exam, they can give you sales budget or they will tell you revenue budget. Okay. So what is meant by sales or revenue budget is that, this shows the predicted rate of sales and the revenue that is expected to be generated from sales. Did you understand the first point now?
Yeah, I understand the first point.
Okay, look at the next paragraph. The sales budget generally is the first budget to be prepared. So in a business, sales budget only they will prepare first because um, because most businesses are related to sales. Okay, once the sales budget has been drawn up, only the other budgets can be prepared. So first they will prepare the sales budget. After that only they will prepare all the other budgets. Okay, from the information that they got from sales budget only, they will prepare other budgets like production budget, purchase budget, and all that. Okay, did you understand that?
Yeah, I understand that.
Okay, look at the next page. Okay. Um, So if the sales budget is inaccurate, the inaccuracies will make the other budgets inaccurate too. So now some budgets, they will look at the sales budget and take those figures and prepare the other budgets like production budget, purchases budget, and all that. So let's say if the sales budget is inaccurate, then all the other budgets also can go wrong. Then all the other budgets will also be inaccurate. Okay, that is what they're saying. And then look at the next paragraph. Sales budget are difficult to prepare because there are so many other variables that are out of control. So that means it is not in the control of the business. It is outside their control. Example, actions of competitors, state of economy and government actions. So, we can't predict. We don't know the actions of the competitors. It is not under the control of the business. It is out of the control of the business. So that's why sales budget are very difficult to prepare. Okay, and due to the fact that many components of the master budget rely on sales budget, the estimated sales volume and price must be forecasted with sufficient care, and only reliable forecast techniques should be employed. So, um, many parts in master budget will be relied on sales budget. Okay, so from sales budget, they will master budget will be relied on sales budget. So, the estimated sales volume and price, all of them must be forecasted with sufficient information. Like it should be reliable, it should be correct with sufficient care, and only reliable informations they will take that, and they have to like has they have to prepare correct. Like they can't prepare something like it should not go wrong. It should be reliable, it should be correct. The techniques they use should be advanced. They have to prepare correctly. Their budgets also carefully they have to prepare. Even though it's an estimate, they have to carefully prepare. It should be realistic, all that, because sales budget, master budget is relied on sales budget. So if sales budget is wrong, then all the budgets also can go wrong. So any budget they have to prepare properly. Not only sales budget, even the other budgets they have to prepare properly. Did you understand that?
Yeah, I understand that.
Okay, until this, do you have any doubts?
No,
Okay, now look at production budget. So what is meant by production budget? Can you tell me?
it's the budget created to see how much can be like how much it would cost to produce the goods or services.
um, okay, okay. Do you know the difference between production budget and purchase budget? Both
Yeah,
are
purchase budget is like the budget created for the items which you are going to purchase.
okay, correct. Production budget?
Yeah, it's the cost which will uh it's the cost which you would incur like other than materials.
Okay, it's like this. That's not that correct, but a bit correct. Okay, so now production budget and purchase budget is linked. Okay, so the difference is production budget is the number of t-shirts or number of Coca-Cola that you're going to produce, that needs to be produced. Number, quantity, physical quantity. Okay.
Oh, okay. Okay.
Purchase budget is the raw materials you need. Raw materials needed to make Coca-Cola. Raw materials needed to make t-shirt. So the raw materials needed to make Coca-Cola, one raw material is that sugar. So that is purchase budget. The raw materials needed to make t-shirt is one raw material is that cotton. So that cotton, that sugar, that is raw material. So the raw materials needed to make them, that is purchase budget. Okay, that is also quantity only. Okay, so it represents the quantity, and it represents the cost of those materials and all that. That is purchase budget. Production budget is that okay, the number of t-shirts that you need to produce, the number of Coca-Cola that you need to produce, how much production you need for a business to run effectively. So in a business, how much you have to produce, how the target and all that. Okay, so production budget represents the physical quantity of the total production. Okay, which may be distributed product wise, period wise, or plant wise to be produced. Okay, during the budgeted period. Okay, that is known as production budget. Did you understand the difference now?
Yeah, I understand the difference now.
Okay. So, and then that is production and purchase budget. Okay. So, factors that you need to consider when preparing production budget. Just if you read them, it's enough. So, like, don't need to like memorize these factors. Just for you to get an idea, I just gave you. So, the factors that you need to consider when preparing production budget is that the sales requirement has per sales budget. Okay, like how much you can sell, you have to know. Okay, you should not overproduce. You can't produce a lots of products, right? You have to know how much you have to produce within this period of time. So that is the first point. And then inventory policies, production policies, the availability of equipment, okay, the availability of raw materials. You have to make a buy decision, all that. Did you understand all this until now?
Yeah, I understand all this.